quick bit before I tell you about Everest and tokenizing a whole economy. Previously, I was general manager at BitTorrent. If you ever downloaded a movie on the internet, thank you very much. It invented peer-to-peer. Quick backstory on that is along the way, like 2014, we pitched to our board, like the top of VCs in Silicon Valley, like we should actually like do this whole like blockchain and incentivize everything with Bitcoin, and they thought we were nuts. And like the entire executive staff, we just all looked at each other. We're like, oh, these guys are just too stupid to help. So you can almost trace the Bram, who invented it all, went and did Chia. Simon's running chief strategy consensus, and it led my co-founder and I to build Everest. And what we started out thinking about was, how do you tokenize an entire economy? Like, the idea behind it was, oh my God, the entire world will be tokenized. And so how do you go about doing that? And we started with let's take India. India had 1 billion people with biometric identity and doing transactions like, by the way, it means you got to do verification of an identity about 5 times a month, and then you do 8 times that for transactions. That's what a real economy is, just so you know. So with that wild ass idea, we started Everest, and we came to Malta because of the VFA regulations. And you guys remember Blockchain Island 2018? All right. You saw that picture of me back then. That's before the MFSA got a hold of me, okay? I was young then and not quite as beaten up. But so we came here, and we were one of the first 10 to actually get the VFA license. I can tell you, it was May 10th of 2021. So with that, why don't I share with you kind of how we went about tackling tokenizing an entire economy. So, a bit about us. Like I said, we're licensed. We do custody, we execute, and we transmit orders, and we onboard users globally. We also have infrastructure, so a wallet platform plus compliance. And for those of you deep in this space, as I put it, I accidentally rebuilt Fireblocks, right? A full wallet platform with KYC, AML, the whole nut. And if I had known any better, I would not have built that way back when. We also have fiat and crypto accounts and rails. That means chains coming in, fiat rails coming in, all of it going around. And I call it a tokenization engine. What does that really mean? We have our own permissioned chain, and we interface also with permissionless chains. Okay, so that means anything we take into custody, we actually tokenize. So I take a euro in, I tokenize that euro, dollar, and other assets. So that stack starts looking like this, right? That is custody at the bottom with a license, full custodial wallet, all the infrastructure, stable coins, and then all the applications, on-ramp, off-ramp, etc. So how hard is it? And this is an eye chart, because I want to, like, no one believed me when I actually like explained it. Like, okay, you want to do just the basics. That 16 to 20 million in 2 years is actually a French third-party research who said if you're an existing bank, that is, you already have KYC and know how to do accounts and stuff, this is what it would take to build a wallet platform with compliance that actually does all this stuff. Okay, so you'll have to get a license. By the way, if you want to start getting a MiCA license nowadays, get in line. Okay? Get in line. It'll take you a year or 2. You want to license everything or tokenize anything else, you need an EMI license, you need a MiFID license. You need a custodial wallet platform, MPC, that is live biometrics plus a PIN, bring it together, the whole 9 yards, right? Then do penetration tests, then do policies, procedures. I'll try to go through this quicker. Do identity. That is, you actually have to deduplicate everyone on your platform, right? You can't have, oh, I've got 500 wallets and let me go ahead and just trade amongst myself. That's an instant go to jail, okay? Compliance, this is what kills you. This is like, and we automated all this. It's still hard. Do all the fiat integrations, which are bank approvals, API integrations, compliance rules, and then do settlement. Do the crypto trading, right? So get all the chains integrated, token management, and make sure you do it with compliance. Integrate all those exchanges and OTC guys. That is, get approved, do updates all the time. Literally, like we have 4 exchanges integrated, 2 OTC desks, and each one of them checks us up on us annually, and also flags us for any suspicious transactions. Then start building the app and the SDKs. That's just to get started. Now, you want to start doing what the market really wants? Do payments and staking, right? So you got to build an e-money issuing and settlement. And do token issuing, right? So you got to build your own EVM, do multiple tokens, but you're going to do an NFT. Oh yeah, here's a fun one. We just did one, and I'll show you a fun case study. You want the Americans to touch it? That's different. As I put it, like anyone, you want to tokenize? Here's a great case study. You want to tokenize a mutual fund. 2 college kids can do that in a weekend. You want to do it and not go to jail? It took Franklin Templeton $50 million in 3 years. That's the hard part. It's the logic and the compliance to really make it good and not go to jail. And then, obviously, financial services. So, accounts for payment, exchange, everything. You want to touch financial instruments, and you got to do all that with. And so this is an eye chart, and I did it on purpose. Like this is like what they teach you not in college not to do. This is how dauntingly freaking hard it is. It's tens of millions of dollars in years. So, you want to know why we're called Everest? Starting to get the idea. So, our solution. We take things in from clients, like DeFi, TradFi, Enterprise. We'll take money in, euros, dollars, pesos, crypto, RWA, so I'll take physical assets. I'll show you a fun case study of that. And even financial instruments. And you have to have a license for at least the crypto, and then you have to have partners for other assets. Right? So you want to touch financial instruments, better have a MiFID partner. You want to touch money, EMI, or a dollar account. Or you have to have all 3 of those. Now once you have those in custody, then you can start tokenizing, right? We tokenize certain things on Everchain and EVM. You're going to want to do that for financial instruments. That way you don't go to jail, right? Or you tokenize them on EVM, Solana, whatever, and then have all the fiat rails. And then you can get to something where people can start swapping and trading and moving money and paying. I call this the anything to anything. Once you tokenize it all, you can tokenize corporate debt and send it somewhere, etc. You can even tokenize dollars and euros and pay other people. But you have to have all of it. So let me show you 2 quick case studies, and then I'll be quiet for a while. So we call it tokenizing money. People know it also as stable coins. So merchants, think of like gaming companies, right? They have fiat money they accept. They also have crypto they're accepting now. They have their own loyalty points, and we're actually now allowing them to make their own merchant money, right? Wouldn't it be nice if Betson had its own stablecoin? And you got users. They've got fiat, crypto, their loyalty points, and merchant money. Right? You have to give them accounts that touch all this stuff. And then in the middle, to allow all that to happen, is a little bit of what we built. Right? So this is, you need that custodial wallet, assets in custody, all the chains, etc. And I can tell you the hard part in this is the settlement. You want to actually say, here's the euros coming in, and it goes out to that stable coin for the gaming company, but then they want to use loyalty points over here and settle between the crypto accounts and the bank. That backplane to allow settlement is really hard. To give you a sense as to how hard, think of, if you guys have been watching, MasterCard is doing their, what do they call it? Their token network, where they literally need to go like, how do you deal with counterparty risk between a bank, a crypto exchange, and the merchant? That's literally what we built. And to let you know that MasterCard's attempting this, they're 3+ years into it, tells you how hard it is again. But with this done, now you're starting to pay anything to anything. So let me show you another case study of tokenization. And this is a real-world asset tokenization. It's GEMS was the token we did. And it was corporate debt from a mining company. So think of a mining company, if you guys don't, like, I don't mean Bitcoin mining, I mean like dig stuff out of the ground like gold or emeralds. These guys have billions and billions in dollars of assets, but very low liquidity, like actual money. And so what they like to do is they like to use their corporate debt. So they pledge collateral and then get working capital to do their thing. So it's corporate debt is what they're really tokenizing. So this company came to us, and we, through our partners, took $644 million of corporate debt, or actually collateral of actual emeralds, right? So took that into custody, and we went through all the legal rigmarole to figure out if you issue a token of corporate debt with this as collateral, is it legal? Where is it legal? How can we do it, etc. Which seemed tough. We then helped this company issue $20 million, which was, by the way, 20 million tokens. It was $1 stable coins of corporate debt. By the way, it also has a utility to it. You could go to the mine. You could like spend your tokens to get your emeralds cut or polished or take a tour of the mine. But the reality is I think most people took it as corporate debt. And then we minted this actually on Ethereum, BSC, and Polygon. We didn't do this on Everchain this time because it was corporate debt. We didn't need to have a permission chain. We then helped them do the facilitation of exchanging, right? And actually purchasing using a debit card. And then placed it into an exchange for trading. And then ultimately sold about 11.5 million worth of those gems. By the way, with almost no marketing budget, which was the hardest part, to be honest. So when people say they do tokenization, I always like to point out tokenization again. 2 college kids in a weekend can tokenize something. You want to do the whole end-to-end? Actually take custody. Then do the issuance and the tokenization, and then facilitate trade, and then put it on secondary trading. That is the whole end-to-end. And it's very, very few of us in the world who can do all of it under one roof. It's almost always one-off little solutions. So summary, like how do you tokenize this? Got to have custody, so you need to be licensed and regulated. You have to have the infrastructure, so accounts, rails, crypto, financial instruments, commodities, the whole 9 yards. And you have to be able to tokenize on permissioned and permissionless chains. So with that, thank you.
Questions? Anybody has some question to Bob? I will come flying with the mic. Was there a hand here? No? Ah, was it you? Okay, ladies first.
Yeah.
For the settlement part, the use case that you were showing, explaining how difficult it is. I mean, by the way, MasterCard is taking collateral, so that's the way how they function. But I mean, how the settlement is done? Is it like done in the real time or?
It's interesting. The answer is yes, kind of, depends on which network. And so, like, the really hard part about this is you have a bank with its own database and time, right? There's only so much you can do with SEPA, SEPA Instant, SWIFT, ACH, or PIX, right? And PIX is instant to Brazilian real, right? Now get it into dollars, and then so you have to, I'll finish my point. You have various different times of databases of fiat rails that also have to interface with different times of chains and liquidity providers. And so what MasterCard is trying to figure out that we already did is that backplane to go, like, you have to make sure you buffer that time by tokenizing literally the euro when it comes in. You literally hold that until the other thing clears, so you avoid the counterparty risk.
Impressive, thank you. So I mean, you are literally linked to, connected to all these payment networks practically.
We have SEPA, debit card globally. We used to have ACH, got cut off of that. We just got our dollar account back. And we've got a bunch of other rails, and so it's a constant addition of rails. What we focused on so far, just to jump back to the payment piece of settlement, we turned on how do you automatically create an identity with a wallet, take payment from a debit card, and then actually deliver a token, and do that all in seconds. We went from 2024, like we had a little direct-to-consumer app. We could kind of show it, and like I said, I showed you the GEMS token. Q1, we did tens of thousands of transactions just from doing that one flow I described. So, yeah.
Hi. I'm trying to wrap my head around the whole situation with tokenizing the debt. So the company, this mining company, yeah, they have the assets, and then they use the assets to get a loan, correct? Now, when you tokenize the dollar gems, you tokenize the assets of the company or the loan that the company gets?
Two answers. So one, it's a utility token legally, and by you can literally take that. I'll get to it, but like let's all be super clear. This is broadcast live and recorded, and if it were truly just corporate debt, that would be a financial instrument. However, since this is a utility token that you can redeem it for actual like emeralds direct from the mine. You can get it cut, polished, etc. There's a huge amount of utility. In practice, I think the perception is that it was a piece of corporate debt that was actually tokenized.
Okay, so because I'm trying to wrap my head around it, if the buyers of the token, if they buy, they basically pay the debt for the company?
No, so let's go ahead and just come up one level and I'll give you the hypothetical. Most mining companies right now, unless you're Rio Tinto and traded on London Stock Exchange, their cost of capital is ridiculously high, right? They literally have to pay, like they want to borrow $50 million, they'll pay $200 million over 5 years, right? They're like, it's just expensive capital because it's a bunch of stuff in the ground. And why is it $200 million? Because their avenues to actually get that loan are really limited. And so those guys just squeeze them. And so if a mining company were to say, hey, I want to go direct to consumer, I want to issue my debt directly or give a utility token and sell my gold and emeralds directly to the consumer, they can take in a bunch of money at a less cost of capital than 4x over 5 years. And they're simply getting around traditional finance choking them off. So I can catch up afterwards and tell you more. But.
Okay, unless there's one very important question pressing on, we are going to wrap it up. Is there anybody sitting with a very, very important question for Bob?
I'll be back at the bar.
I have some questions for you, Bob, at the bar. Thank you very much for that. We are going to be here again next week to talk about AI and crypto with the AI Crypto Brains. That's what we're going to call it. It's going to be a research project from MCAST presenting here. I hope you enjoyed it. See you at the bar and see you next week. Thank you very much.